Good evening and welcome to the FITT Show. Financial information for today and tomorrow. I'm Bobby P. Kinzer.
And I'm Thomas Doty.
And we are the FITT Show, helping our people get their finances in shape. Welcome to everybody around the country and around the world. Thank you for tuning into our show, which we plan to help people with financial information and helping people increase their wealth and hopefully generational wealth. Just want to make a little financial disclaimer. We are not financial advisors. We're not fiduciaries. We're not licensed brokers. We are financial educators. And we're hoping that we can empower you, that you would go out and take action and multiply and increase what you have. It's not about what you have, it's what you do with what you have. And we hope you can provide that kind of information for you. Just want to remind you that if you have any comments, please put them in the comment box. And that also, by the way, helps us increase our viewership exponentially by putting comments in the comment box. But look, we like to make this show interactive. So we would like for you, if you have some questions, you have an opinion, or you have a comment, please put them in the box. And we've been saying this for years, but please, if you have a subject that is important and near and dear to you, please put it into the box. And if we don't cover it tonight, we definitely promise you we'll cover it at another show. So please put, because we want more. This is our 182nd show. Last week, our show was on financial moves to make in 2025. We hope that was very helpful to you all. And you must go out and share this with other people. Just don't hoard the information for yourself. Share this with your family. Share this with your coworkers, your friends, because it's all about rising all the boats. It's not about just you. It's about us. What I'm finding out from financial studies, the issue is not about people's mindset or behavior or that they always are making bad choices. The biggest thing is that the system is stacked up against us, and it takes all of us to work together to change policies and get things changed. So it takes all of us. So make sure you share this information. Like I said, just a couple of housekeeping things, and make sure you click on the like button and the heart button, because that also gives us traction. Today is January 23rd. Dope, the time is moving already. Can you believe that, man? And soon it'll be 2026. But let's start with 2023. Dope.
Yes, sir.
Do you have any good news for our top of the show topic, which is the stock market?
Well, I got good news if you invested. if you in the market, you made some money. At least I know I did.
I did too, though.
I had a good 2 weeks. The S&P's up 3%. NASDAQ's up almost 4%. And my Microsoft went on a nice little roll. It's up 22.5%, which is, I'm very happy.
Return.
Yep. Brady's up a couple points.
Oh, yep. No, I just looked down there. You getting there. Go ahead, Palantir. I just noticed that.
Yeah. Apple's down 4 points. Their earnings come out later, I think the end of this month or early next month, but they're expected to be down. A lot of the reason is because of China. They're getting their butts whooped in China, which is obviously a big market. And so this is kind of the prelude. A lot of people are expecting Apple to have a big drop off in the next couple of weeks. So we'll see if that happens. I'm still holding tight. My HP is up $1. NVIDIA had a nice little move. It's up 13 points. So Google's up 6 points. My Pfizer stayed flat. And my Palantir is up 10 points. I am very, very happy about that. So Thomas had a tremendous week, and I'm just happy. I hope that's good news for you too.
Right, exactly. Exactly, dope. Um, phone's acting kind of crazy here. Um, it's a text from it's like Trump, and it's like messing my phone up. No, sir, I hope he ain't messing with my daggone phone. So that's it for the stock market. And also, just want to let everybody know, gold is up tremendous. Gold is now at 2700 and that's a great thing. That is a superb actually thing going on there. So hope some of y'all listen to us and was invested in some of those, either actually gold itself, physical gold, or at least into mutual funds or ETFs. I hope y'all did.
Hey Bob, that gold fund I bought back on April 15th of 2024
Right?
is up 27%, and the year's not even up yet.
Wow. Good move, though.
Yeah.
Good move. So let's talk about I just want to mention that about gold because we always talk about diversified portfolio, and that's why we also talk about commodities too. But we also talk about diversifying your portfolio by having cryptocurrency. And cryptocurrency, ever since the election of Donald Trump, and actually since the inauguration, the cryptocurrency market has been going off, specifically the Bitcoin. Even the market cap is now up to $3.7 trillion. And Bitcoin is up 4%, but it's up to $104,464 per Bitcoin. And that's good. So if you were got in the cryptocurrency, and we got an interesting show today about cryptocurrency, and we want to talk about it because there's a lot of momentum happening. And President Donald Trump, he signed an executive order today that delivers on two promises he made about cryptocurrency, and he's trying to lift some of. And first of all, it's not fully regulated because SEC doesn't regulate it, but he's trying to put it in play, and he's talking about moving the capital gains taxes on cryptocurrency, and he's trying to make the United States. Well, he actually said this is his word. He want to make us the cryptocurrency planet, the number one place for cryptocurrency. So one of the things driving us to talk about the show today is the momentum that's happening with cryptocurrency, and especially the Bitcoin. And as you notice, we always just talk about ones that's within the top 10 because there's over 9,000 that are active. It's about 45,000 cryptocurrencies, but only 9,000 are active, and all of them are not good. Every one of them, even Bitcoin is speculative, but some are way more speculative than others. No, I don't know if you notice in this chart today, number 3, XRP Ripple just moved into number 3.
Ripple. That used to be the wine of choice back in the day.
When they call it Bougie Lipple. It moved to number 3. It was outside of the top 10, and it moved up to number 3. Matter of fact, it's down between last week and this week, but from 2020, it is up over 1,000%, with something like 11 cents or something like that in 2020. So Ripple is moving, and it's sort of like Ethereum. Ethereum is still number 2, and Ethereum is based on smart contracts, and it was supposed to be a little bit more structured, better, and they're using what they call it Ether to actually process what they call proof of work. But they sort of so Tether is still, which is a stable coin, which is pegged to the dollar, and Solana, which is number 5. It went down to number 6, but it went back up to 5, and it's up 19%. And the reason why Solana is kind of up because the Donald Trump has put out cryptocurrencies, a meme, and he put out another cryptocurrency, and I think it's a Trump coin, cryptocurrency,
I think his wife has one too.
and yeah, and Milana, that's right. He got one, and his wife, and it's on the platform for Solana. So that may be why Solana went up 19%. But I don't know about buying that. But the Dogecoin though, it's been taking a beating, and the top guy who was the co-CEO, he left, and then yesterday another top board member, executive for Dogecoin left. So I can see, I don't know, I don't, and then, Elon Musk supposed to be behind Dogecoin and Mark Cuban, but it's down 9%. And a lot of people are bailing on the Dogecoin. I don't know what's going on there, but I don't know. Elon Musk is in there working with Trump, and they might be heading towards putting more emphasis on those Trump cryptocurrencies. But that's it for the cryptocurrency market, dope. And before we get into our topic today, dope, is cryptocurrency for you? You want to remind people of credit freezes.
Yeah, this is one of those things that we talk about, but we don't think everybody takes it seriously as they should. I feel strongly about it because I'm paranoid about scammers out here. But so take a picture, take a screenshot of this so you can figure out how to get your credit freeze, your credit file frozen. You don't need it to have it open if you're not applying for credit. And it's very simple to unfreeze it by just a phone call or going on to the app. And so you can see for Experian, you can call their automated line, or you can do it online. Like for Equifax. For Experian, you can go online. There's also a number. And for TransUnion, it says you can go online, but it's pretty difficult to do online. I suggest you call the number. But get your credit file frozen. That will eliminate one possible way that people can get at your information. And also, we always remind you to check a credit file every 4 months. You get one free from each of those credit bureaus. So spread them out because you get one per year from each. So you want to do it every 4 months so you have it covered within a year. So this is just a public service announcement to remind you to do it, because I know it's one of those things you probably intend to do but never get done. So hopefully this will spur you to start the new year off with your credit file frozen.
Just really want to remind people, because some people ask me, this does not stop you from using your credit card. It does not stop you from using your credit card, okay? It just stops people from tapping into your credit information and applying for credit cards under you.
Yes, in your name.
In your name. So, and then there's so many mass, what they call data breaches that's going on. And I talked to several people that I know that's been in those massive data breaches, like even Experian had a data breach. And it's not 100%, but it's 99, 98, something like that %. So make sure you go out there and do that, my good people. And that reminds me of one thing, dope. With this show, this is our going on 3 years, though.
Yep.
And we've dispensed a lot of information, but it doesn't mean anything if you don't take action, you all. And that's what I'm finding out in studies, not just with our own study, but global study on financial literacy has shown that most people do not take action. And so make sure when we tell you these things, the credit freeze is one of the things that's current that we're talking about. We actually take action. That's been a couple of weeks ago. But, we're just concerned. We're not trying to beat you over the head, but we just know what is a headache, such a headache, if you do get identity theft. So just try to be prepared. So keep that in mind.
And one last thing, you probably don't have everything to get your taxes done, or you may, but get it done and out of the way to eliminate the chance of someone filing taxes under your name, because that's happened to me personally, and it's a nightmare to correct. It truly is. So you got to do it anyway. Don't wait to the last minute. And if you worry about having to pay, even if you owe, you don't have to pay until April 15th. But you can file. I think the IRS is accepting returns now. So there was a little delay. I think the 21st is when they start accepting returns. So get your taxes out the way, get it done behind you. You'll feel
action.
Huh?
Take action.
Yeah, you'll feel better because you got to do it. It ain't like waiting is going to make it any easier or going to change anything. Get it done and out the way.
Yes.
That's our last public service announcement for today.
Yes, for today. So our topic today is crypto for you. And why are we talking about that, though?
Well, I mean, if you read the news, if you've been watching the newspapers and the business side, you've been seeing a lot about crypto, and it's really been moving the last few weeks. And you know, personally, I've bought some and done very, very well. I think I'm up almost five times what I put in.
How much you put in?
I only put in $4,000. I didn't put a lot of money in.
And how much is it now worth?
About a little over $20,000 now. So.
Listen, y'all hear though, oh, this is a little bit over 20 grand.
Yeah, but I mean, it's not like it's not like I'm going to sell it. I'm going to leave it in. That's kind of just a few bucks I put in there, and I'm going to see where it goes. I don't think I'm going to buy any more because it is kind of risky, which we're going to talk about. But I've always felt that it's something that makes sense to me as far as a tool for transactions. But anyway, we'll get to that in a minute. But we know cryptocurrency, the industry is expanding rapidly. And so in 2025, I mean, it's been crazy so far this year. I mean, since it's gone from like under 40,000 in January of last year, then it kind of hung around 60 for a while. But now it's up over 100,000. I think Bob said it was 104,000.
Correct.
And the current Trump administration, the person he put in charge of the SEC, he's expected to be much more liberal toward the crypto industry, a little lighter on regulation of crypto exchanges. And that might mean the SEC is going to stop looking at it real close and going to worry about other things instead of being concerned with what's going on in that market. And so that may be why the digital asset prices are rising so tremendously, have we seen after the election. And I mean, like I said, it's up over 104. And one thing you can be sure of, it's evolving at a blistering pace. Momentum is obvious, but it's still uncertainty involved, and it's probably going to be volatile over the next several years. But right now, it's rolling.
Yeah. It really is. And the reason why, you know, like Doe said, we're talking about, you know, cryptocurrency because it's about, you know, our whole show is about education, right? And one of the things we are just strong on is building your wealth, you know, and invest. And the way you do it is through investments. And this is just an alternative investment, you know, but you know, investors, you know, may be drawn to cryptocurrency by stories of some early adopters, but becoming millionaires. But it's essential not to invest more than you can afford to lose. Now, conservative allocation to digital assets, which is a big thing now. Digital assets is the wave of the future, you know, which that digital assets is like is what I'm talking about. It's cryptocurrency. You know, digital assets is like ETFs, believe it or not. They're trying to trade funds and may be appropriate in an effort to avoid negatively impacting of investors' financial future. Now, digital assets are not for everyone. We understand that, but it might be for you. And what we want to do today is give a better understanding of particularly the digital asset of cryptocurrency. But a financial advisor may be able to better help you integrate if you're looking to diversify your portfolio. But cryptocurrency might be for you.
Yeah, and if you think about the benefits of it, and we talked about this before, but just to repeat that, you got to know how it's structured, okay? And cryptos are stored on a blockchain, and it's a sophisticated database that records transactions in a decentralized manner, okay? And this decentralization eliminates the need for third-party verification. So you don't have to worry about the government getting involved, taking a piece, or financial institution getting involved, taking a piece. So it's kind of like a peer-to-peer transaction. So there's no middleman. So each block of transaction in the blockchain is linked to the previous one through a cryptographic hash. And so consensus mechanisms like proof of work or proof of stake, which maintains the integrity of the network and makes it difficult to hack or manipulate. So that's one of the good things they like about it, that it's hard to get into and get scammed. It is very transparent. That's a key advantage of it, is that all the transactions are visible to participants. And that's helped build confidence in cryptocurrencies and forward on their applications. So Bitcoin is the most well-known cryptocurrency. And I think Bob said the market value now is over $2 trillion. That's a whole lot of money. Okay. Crypto also offers efficiency and cost advantages for monetary transactions. Because it's digital, they, again, bypass traditional financial systems. The bank, we think about MasterCard, use a credit card. Some vendors charge a little, some merchants charge a little bit more because you use a credit card. The business owners are never happy about using credit cards because they usually have to pay MasterCard or Visa 3%. And so Bitcoin would allow for faster, cost-efficient transactions, should be cheaper transfers between people. And this even works for international payments. And the scarcity of Bitcoin also makes it attractive. Cryptocurrencies like Bitcoin, they become a popular investment area. In 2024, Bitcoin nearly doubled in value, okay? So it capped off a supply of 21 million coins. That creates scarcity, which adds to its value proposition. It's kind of like gold. Gold is important because there's only so much of it. And the thing that I like about it is the diversification side. It's another advantage or another tool to invest in something a little bit different that is going to trend differently than your stocks, your bonds, or commodities. Okay. And so it's another asset class to put a small amount of money in if you're interested in investing in crypto. And it can, in some ways, reduce your volatility, even though it's very volatile. It could enhance your long-term returns by spreading your risks in different asset classes. And that's what you always want out of a well-diversified portfolio, because everything in most portfolios don't go up at the same rate. Usually when something's going up, something's going down. So crypto is another asset class to consider to invest into.
And I want to take a quick pause because somebody asked me today when I told them, they said, Bob, why are you talking about crypto? I'm not interested in no cryptocurrency. And I just want to share with you all, we're not promoting to do it. We just give you information as an alternative investment. And the name of the game, you all, because some people say, man, I'm 70, I'm 80, I'm good. But this is the thing, you all. We have families. And the reason why most families and cultures do not get into the financial mainstream, because they're always starting at a negative and they don't have any help to move them up, and they always behind the 8 ball. So we're just trying to present some things that could possibly get you some leeway to be able to advance your wealth so that you can pass it on, and your kids and your kids' kids will not have that much of a struggle. Because me and Dope, we started at, flat zero. You know what I mean? Nobody, gave us any assets to start with. And if we did, we would be way further ahead than we are now. I'm not complaining, but I'm just saying our kids are going to be better off because we have started. And that's why if you haven't, and like, don't just listen and learn. And we're not saying you should do it, but the key to our show is education, right? Learn about something, and whether you use it or not, at least learn. And now I want to talk about the downside of crypto, right? Now, any type of asset class, right, should come at a buyer beware warning. But that is especially true also in this case. Now, Dope talked about, the positive things about cryptocurrency, the upside. And I just want to, give you the other side. It's very volatile. We've talked about that all the time. Crypto is still an emerging asset. Now, its origins dated back to 2008 when the Bitcoin was launched. Now, over this period, it's been a roller coaster of volatility. And remember, volatility is different than risk. We're going to talk about that in a minute briefly. But in the case of Bitcoin, it has suffered 50% corrections since 2008. Now, Bitcoin and other currencies rely heavily on speculation and what they call leveraging, money coming in, coming out, right? The crypto market can be sensitive to swings in investment sentiment. It is, and because no one knows why it swings, but it definitely sometimes is tied to people's emotions, people's, sentiment, FOMO, the fear of missing out. Like when it's up, usually people want to get all in. When it's down, they want to jump out. Now, this can be exaggerated with the relatively low amount of liquidity in the global market, which is about it's over it's $3.7 trillion versus $50 trillion with the Standard and Poor's 500, right? The regulatory risk is there too, but while it's true that Trump has signaled strong regulatory support for cryptocurrency, he's even talking about removing the capital gains of cryptocurrency. It is not in place yet, and it is unclear what form the regulatory will take, because the SEC does not regulate cryptocurrency. And there are a few 401 accounts currently investing in crypto. The GAO has reported in June of 2023, this kind of remains unaddressed, but as a result, certain crypto assets continue to trade in markets that do not have investor protection. Beware of fraud, even though it's hard because it's encrypted, it's hard for fraud, but there has been fraud, just like with any other security out there. Cryptocurrency has been susceptible to fraud. Like in 2023, there was over 69,000 cryptocurrency frauds, and losses exceeded about 5.6 billion. A lot of people, like I said, they hear about, I can make millions, and they jump in and don't do their homework. And I told you, there's over 9,000 currencies out there. The other thing is, last thing I want to talk about is the disruption. Another issue is the potential disruption of new technologies. After all, innovations like powered by AI or what they call even quantum computing may make blockchains more obsolete. So new technologies coming in may get rid of the old technology of how they process Bitcoins. Last one is, this one's interesting. The environmental risk. Cryptocurrency that rely is called on proof of work mining, which requires massive amounts of computer power, all of which is fed electricity and is cooled. While many investors may be aware of the large energy consumption involved, few know about the water impact of Bitcoin. Each Bitcoin transaction requires as much water as one backyard swimming pool. That's each transaction. And by the way, I just want to throw this in there. People think Trump was crazy talking about buying Greenland. You know why he's interested in Greenland? Because the resources up there, and mostly all the computers, a lot of the computers that are running cryptocurrency around the world are housed in Greenland because of the cool temperature up there. So he ain't no fool as he may think to be.
Yeah, Bitcoin right now is going bonkers. There's a bunch of reasons for that. I'll talk about a few right now. It's obviously the standard in terms of trust, brand, and liquidity. Federal Reserve Chairman Jerome Powell recently underscored this point by calling Bitcoin just like gold, only it's virtual, it's digital. And you think about that, that comparison speaks volumes about Bitcoin's growing legitimacy in the financial world. Another transactional development or transformative development that's happening is in early 2024, they started allowing Bitcoin EFTs or electronic traded funds, and they've gained traction like crazy since their introduction. They're shattering all kinds of expectations. They raised over $60 billion within 9 months. That means people invested $60 billion in these ETFs. And if you look at it, there's a couple big companies that are selling them. Fidelity is one, and iShares. You know, they have become one of their crazy, best-selling, most popular products, and a lot of investors are jumping on those. And one more key element is the fact that it, as I mentioned before, it is a fixed supply. And so the total number of Bitcoin is capped in the original source code at 21 million. And so this built-in scarcity kind of bolsters the value of it. And so this real-time supply shock is unfolding, and Bitcoin's fixed supply is trying to meet this surge of demand, and that's why prices of it are going up. And so a lot of the people who hold it are like myself, and are not really looking to sell at current levels. Yeah, I'm sure there's a lot of people who are speculative and who buying and selling, getting in, getting out. But I think a lot of people buying and holding and just waiting to see how high it can go. Because again, I think the transaction part of it just makes sense to me. And so if you're ever thinking about invest, you should proceed with caution. It remains highly volatile. I mean, it can drop to zero tomorrow. You know, it really has no true backing behind it. Okay. And so people are creating all these meme stocks, and it's really going crazy. But we, as Bob said earlier, we aren't recommending you run out and buy it. We just want you to be cognizant of the fact that it is available, and you might want to determine if it works for you. And but don't get into it expecting to get rich quick. That's probably not going to happen, even though it's happened to some people. But it's just another asset class for you to consider.
And you can't time the market. For like what Dope said, he put in 6,000 and he's up to about 20,000.
I put in 4. It's up to 20. Yeah.
Yeah. So I put in 2 because I got in late, and I'm up over 150%. I put in 2. It's up to actually $4,700. So it doesn't take much, but it is an alternative investment. Dope been talking about Bitcoin, but there's the number one coin has been Bitcoin, the steady, and the number 2 has been Ethereum. And they talk about Ethereum, which is smart contracts, where they say it's a little bit more structure behind it because it's called smart contracts. It still makes it highly speculative. It just makes it less speculative than some of the real high speculative ones. But Ethereum is the second largest one in market capitalization, right behind Bitcoin. And it makes it compelling isn't just its stature, it's the role of the platform that is building decentralized applications on. Decentralization meaning, the Doty mentioned this earlier about crypto, decentralized meaning there's not a central the Federal Reserve is a central, banking system, right? And it's the fiat, and they determine, how much to print. They determine which the rates are, right? So, but decentralized is not. It's decentralized. It's whatever the market bears. But particularly in areas like financial services, this Ethereum is set apart. At its core is what they call Ether. That's how they process these the actual coins, which serve as a fee for transaction on the platform. Now, institutional allocation disparity between the Bitcoin and Ethereum is one of the most overlooked opportunities in the market. And when we look at number 6% of Bitcoins are in exchange traded funds versus 1.9% of Ethereum. And that's one thing that the SEC has allowed, which is interesting, allow people to put cryptocurrency in ETFs. But Ethereum is lagging, and there could be a massive gap, and it could be a correction between these two. And that's the kind of things you look at, the value of and the potential of these particular investments out there. The institutional investors are gradually recognizing Ethereum isn't just another digital asset. 2025, they noticed that the driver and the upsize, and it's this thing called with Bitcoins, with Ethereum, these smart contracts, they have this thing called staking. You can actually put up your cryptocurrency and make interest off of it. You could loan it out and make interest off your cryptocurrency. It's called staking, right? And what makes staking so attractive is its ability to deliver yields often surpassing those of traditional savings accounts or fixed income bonds. That's another thing you can do with cryptocurrency. And you can borrow against cryptocurrency. It's so interesting.
Okay, so we've talked about crypto, Bitcoin, Ethereum. Well, looks like we're going to have crypto IPOs coming along soon.
And which is initial
public offerings.
Yes.
Okay, so you had this crazy rise in crypto stocks. That's been one of the most crazy things that's happened in 2024. One of them was Coinbase Global. That shares they've doubled. MicroStrategy, their shares have gone up crazy, 500% surge year to date, which is just, it's out there. But there aren't many not many pure crypto stocks available to trade on traditional exchanges, but that could change in 2024 with a more welcoming IPO environment. And Donald Trump has talked about the guy he picked to lead the SEC. He should provide a big boost for crypto IPOs, since he's a crypto advocate who is expected to pave the way for smoother regulatory approval of new filings. So there are going to be IPOs. They're going to be going crazy. And again, this is not one of those things I would ever invest in because it's just too speculative. And truthfully speaking, you kind of got to be in the know, because usually when a guy like me finds out, it's probably too late and all the money, or a lot of the money has been raised. But they're going to be out there, and there's a bunch of different IPOs that are talking about coming out, and it's going to be crazy. So be on the lookout for those. I'm not going to invest in any, but that's going to be another avenue to invest in cryptocurrencies.
No, there was some. I didn't mean to cut you off.
I'm done.
There were some professional athletes who opted to take their salary, large amounts, in cryptocurrency. So it's becoming the exchange currency for doing business. Now, some people have asked me about this, and they said, man, cryptocurrency, you can now invest cryptocurrency in your retirement account. Now, some people say, when did you do that? It's not a crazy question, because time was including crypto in your retirement account seemed far too risky, and some financial experts now recommend it for diversification. But as always, buyer beware. The surge in interest in cryptocurrency and the change in regulatory landscape will likely have a major impact on retirement planning. Um, you know, uh, President Trump's presidential win marked a turning point in cryptocurrency regulation. As Doe said, Paul Atkins, who he's going to be having as the SEC chair, he was the co-chair of the crypto lobbying group Token Alliance. So I would think he's going to be coming in favorable with cryptocurrency. And it signals a pivot towards a more crypto-friendly framework. Adding fuel to the fire, check this out, and I said this earlier, Trump has floated bold policy ideas, and this is included a creation of a strategic Bitcoin reserve and a proposal to exempt capital gain taxes. President Bush is recommending proposals.
President Bush.
Bush. President Trump. I can't even say his name. President Trump is actually recommending that we pay down the $35 trillion deficit we have. Guess what, Dope? Cryptocurrency. So meanwhile, Wall Street has ramped up its embrace for crypto with Bitcoin and the crypto ETFs, the exchange traded funds, and other products. And the industry giants like Fidelity, Schwab, BlackRock, Vanguard, they all charge. And a major catalyst for this enthusiasm has been the rise of the Bitcoin ETF, which have made it much easier to invest in cryptocurrency.
Okay, now how do you do it? If let's say you wanted to put some crypto in your retirement account, there's really two basic ways to do it. You could do it the indirect approach, and that's where you invest in a publicly traded security like a spot Bitcoin ETF, which we talked about earlier. And this is available with traditional IRAs, Roths, and even some 401ks. The other way to do it is the direct approach, in which you purchase cryptocurrency within your retirement account, the actual crypto. And this involves working with a platform designed for such investments like crypto IRA, or even if you could do it in like Cash App, you can do it in Robinhood. There's a bunch of ways out there to do that, where you can go in and actually buy Bitcoin and put it in your account. Actually have the actual crypto in your account. And this can provide an extra layer of security just because of the way it's set up. And direct investing and it requires you setting up a self-directed IRA. But not all IRA providers offer the level of flexibilities for crypto investments. And so there's a couple of platforms that you can do it. Just make sure you don't fall prey to something that's a scam, because you got to make sure it's legit what you're doing. If I was going to do it, and I'm considering doing it, but I'd do it through Fidelity, and I'd do it with an ETF, and I'd probably do it with a fund that invested in several different cryptos, as opposed to investing in just Bitcoin and being totally exposed in that area. And so you got to look at anything you buy. You always got to be concerned with cost. That's always important. And there's three basic costs of a crypto IRA. You got setup costs, you got maintenance fees, and you got transaction fees and investment expenses. Okay, so you gotta pay attention to what you're being charged, and again, find that out before you buy or before you set the IRA up, just to make sure you are getting taken advantage of. And as we say about everything, you got to read the fine print, having trouble with that word. You got to read the fine print, and always comparison shop and make sure you're getting, number one, a legitimate, reputable firm, and two, that the fees are competitive.
I just want to talk for a quick minute of what not to do when investing in crypto. after we talked all about that. But it's just something, to be aware of, because I'm telling you, it's just like any other investment. It's a viable investment as long as you have a plan and a strategy and you understand what you're doing and you use the money that you can, you're not worried about losing. So the typical crypto hype cycle looks like this. Bitcoin or similar fund posts a rapid growth. People don't want to miss out, called FOMO, right? They buy in right when the asset is most expensive, only to suffer when the price moves around, oscillates, and goes downward. Or they look at the current value of a Bitcoin and decide it's too pricey, not realizing it's possible to buy less than one Bitcoin. You don't have to buy a $104,000 Bitcoin. You can buy a piece of that coin. So they look for a cheaper crypto asset. That's what the young people mostly do in an absolute sense. They over allocate to make up for the perceived loss for missed time in the market. Now, this isn't a behavior exclusive to crypto either. A lot of tech investors may feel like they've missed the boat, like NVIDIA gains, but the cost to buy NVIDIA is too high and they didn't jump in. So they look at NVIDIA and they go and look for a stock that is like NVIDIA stock, and they overinvest in it, trying to make up the difference because they missed out, hoping the benefits from the same forces that lifted NVIDIA. That's how the hype can mislead you. So in short, you can't chase after crypto hype.
Yeah. Bottom line, given the risk, it's important to be prudent with crypto. Okay. And, we always give it like a ballpark number. If you think like 2% might be a reasonable amount to say, if you want to go invest in Bitcoin, you'd put 2% of your portfolio, which isn't going to make you or break you, but you would be able to maybe participate if it continues to go up, or not be hurt too badly if it did tank. And so if it went to zero, you wouldn't be, jumping off a bridge or anything. And if you think about that, the volatility of 1% in your portfolio, or 1 to 2% in your portfolio, that could happen with a particular stock. NVIDIA can go down a bunch, and that could cause a 1% change in your total portfolio. So if you think about a 1 to 3% allocation, it won't make you rich, but again, it won't destroy you. And that's kind of where if you are going to do it and you understand the risk involved, or if you need a financial advisor, you get their advice and input, and you decide to go in, then don't invest any more than you're willing to lose, because it could go to zero tomorrow, and it would not be a shock. So just keep that in mind.
And it can go 5 times as much like Dotes did. Before I get into the summary and takeaways, because we talked about a lot. There's the conversation going on here on our site, talking about we all better pray we last these 5 years together. That's okay. None of this president's moves make any sense. I never care about who is in office. I keep my faith in God, not man fear, not he's with us. Noli said I wouldn't want to invest in crypto, and that's you have that option. But I want to just address the issue about the Trump administration. You all, one thing I found out, and it's been way worse presidents than him, because you can't tell me who the 11th or the 18th or 19th president was. You know why? Because they were terrible. This ain't the first time, but the key will be, and Thomas Doty talk about, if you get your house in order, financial house in order, you can weather and absorb the financial shock. It may hit you, but it won't hit like some of the people. It's going to crush them. The people at the bottom will have no chance to come from out of the bottom if you're down there. That's why I said it's important that you do something, within your household, within your means, and really, this is why we're talking about cryptocurrency, because it's another opportunity to build wealth and the interesting thing about this, though, no one could buy, well, no one want to, or most people can't buy one Bitcoin, which is $104,000. Nobody would want to. But what's the change in the playing field is the little man, it used to be just the big man who could afford that will be able to play in that game and make money. But now they're making it available for the little guy, and all the big guys are going to be in there trying to make money, but it's just another option. So, Dope, let's go to the summary and takeaways for today, my good brother. And it's going to be on you.
You got to understand the risk. Again, before you invest, understand the risk, understand your own risk tolerance. If you don't have a stomach for risk, then you probably don't want to play in the cryptocurrency market. So don't, as Bob mentioned just now, don't just chase, I want to buy some Bitcoin because it's going up like crazy. If you can't handle the risk, stay out of crypto.
Right. The risk is speculative, right? Anything can happen. It's high risk, but that's different than volatility. Accept volatility. That's different than understanding risk. Volatility is the movement of it moving up and moving down. It's volatile. It's highly volatile. But the key, that's different than risk. But accept the volatility. Like I said, most people, when it goes up, everybody want to jump in. When it goes down, they want to jump out. It's actually supposed to be the opposite. When it goes down, you jump in, and when it goes up, you jump out. But it's volatility is totally different than risk. And just accept that it's going up and down, and being, as me and Dodo always talk about, it's about the long play.
Yeah, and it does provide diversification. It's a different asset class. It probably won't move like your stocks and bonds. And it just gives you another way to weather things that may come up, whether it's political, whether it's a war, whether it's a natural disaster. It will probably not move the same way as other asset classes. So it'll give you another way to possibly make some money.
Fourth, fundamentally, it makes sense. Meaning, like Dope was saying, it cuts the middleman out. It's direct peer-to-peer, to retailer person, buyer to retailer. Give you an example. Visa. When you go to use Visa at Target, right? You go to use Visa at Target, Visa charges Target 3 or 4% for using that card, right? When you deal with cryptocurrencies peer-to-peer, you take out the middle person, and so people say, well, hey, they're charging Target to 3%, but you know what Target is doing? They're baking it back into the products, or now some restaurants are charging the 3% back to you. So that's why it fundamentally makes sense, because of the scarcity of it, because of the crypto of it being hard to fraud, and it makes sense taking out the middleman and you're going directly peer to peer. You're not paying those extra costs. So fundamentally, it makes sense.
Yeah, and we're talking about cryptocurrency, but there are several other alternative investments. So if you're thinking about your portfolio, consider alternative investments. Look at other things. Look at real estate. Look at mortgage notes from my man Rodney Madison. There's a bunch of different opportunities to make money, and we often think stocks, and a lot of people unfortunately only think about a savings account, which is not gonna get you where you want to be probably. And so look at other alternatives. That there are other investment vehicles out there that, number one, spreads your risk, and number two, offers opportunities to build wealth. So crypto is just another option for an investment. But there are a zillion others. Do research and find out one that works for you.
And lastly, determine if it's for you. We know everything. It's not a one-size-fits-all when we're talking about investments, and we're talking about financial goals, and we're talking about investment portfolios. Determine if it's for you. But the thing is, you all, some people say, oh, man, I'm too old to be. But I told you, it's about generational wealth. Yes, you may not need the money. Well, how about setting your children up and your grandchildren up, your children's children? There's a statement in financial advisors saying, why do most Black people don't know who their great grandfather is? Because he never left them anything. And if he did, they would have a 20 by 20 picture of great grandfather on their wall. And it's not his totally fault. It's just that he may not had, the means. But as we, as in the millennial, have these options now, have a show like me and Dope talking about ways to increase your wealth. These are the things we talk about, y'all. We're not necessarily promoting you to go get cryptocurrency, but we are promoting that you learn, get educated, and take action. Take action is so important, you all. It's so important. We talk about stuff every week for 3 days, but it doesn't mean anything if you don't actually take some action. And like I said, it's all about our kids. And I'm gonna use this last analogy. It's like, you ask your kid to come play Monopoly with you, but you tell them they got to sit on the sideline for 60 minutes, right? And they watch. And then 60 minutes, they can get into the actual game, Monopoly game. But guess what? All the properties are bought up. So and that's how I'm saying, that's how it is. We don't, and like I said, me and Dope, we didn't have the support or the foundation of this information of our family passing on assets to us. But now we are going to be able to do that for our kids and hopefully our kids' kids. And that's why we are having these kind of discussions.
Yeah, and if you think about it, I mean, we both have done pretty well financially. We had a bunch of blessings, just more blessings than we can even think about. But if you sit back and think, had we started with a base of either knowledge or money, how much better could we have done? And now we don't want to sit here and play the what if game because could have got it and blew it all. But what Bob's talking about is leaving generational wealth and allowing your kids to do some things that maybe you weren't able to do, or see some things you weren't able to see, just to expand their knowledge, their opportunities, maybe go to colleges that you couldn't go to because of money, because the only way I could go to college was on a scholarship. If I got a basketball scholarship, I probably wouldn't have gone to college. But if money, if you had a base of money, that changes everything. And you think about even having a basketball scholarship, that's like going to college and having a job. Obviously, we both love basketball, but it's, you got 3-4 hours at your day that's pretty much accounted for. So maybe not having to play basketball and having a base of money allows you to do things that you might not be able to do. It just opens up worlds of opportunity if you can leave some money, if you can start with some money and build from there, as opposed to starting at zero. I actually started at negative. When I got married, I had $0. Luckily, my wife had some money, but I had $0. But it started from there and just built and blessed, and things worked out. And I don't know if it's luck. I think some of it is luck. Some of it is the research I do, and 99% of it is the blessings. But I just have done really well following some of the same things we trying to get you guys to understand, and some of the things that we talk about. And I don't do anything crazy speculative. I don't do anything really, really wow. I just follow basic principles that make sense, and things like saving. Make sure I save first, and it's worked out for me, and I think it'll work out for anybody who follow these basic principles that we talk about.
And don't, sometimes people get on me. I don't swing for the fence. I don't swing for the home run. I swing for the base hit to get on base, because that's how my life has been. I stole a couple of bases. I didn't get on because it was a hit. There was hit. Sometimes it's just getting on base. But
but Bob, but that's the key. And the thing is, once you got some money, you can take a little bit of money and swing for the fences. And that's the advantage of having money. And that's something that we never understood because we never had money. But it's just like the situation. I'm sitting on a huge gain with NVIDIA. And is technical swings at things that may be very, very risky, but also have an opportunity to make a lot of money. And that's what Palantir is. And if it doesn't work out, I can use that loss to offset the gain. So again, it's a matter of understanding the rules of the game. And in this country, the tax code is built for investors and business owners. And so if you're not doing, ideally you should be doing both of those, but if you're not doing at least one of those, then you're not taking advantage of opportunities that are clearly in front of you. But if you understand the tax code or get somebody to explain it to you, if you're a business owner or an investor, you got all kind of breaks at your disposal. The money you make, you get a break on paying taxes on it versus if you work. You know, I just mentioned losing. If you lose, if you invest and lose, you can get a tax write-off. Those are the kind of things, and they're just old saying that people who work pay their taxes first and then live on what's left. But people who have a business do everything they want to do and then pay taxes with what's left. And there's some truth to that. So again, if you want to take advantage of the tax code, then you want to have a business and you want to be invested.
So with that, I want to give a shout out to all our wonderful viewers. Modestine, how you doing there, Donna, down there in Lexington, Kentucky? Robert, Rodney L. Madison Sr., the NoteExperience.com. Thank you. My sister Nolia, glad you're on. My sister Linda, glad you're on. Love you. Now, Dodie, what's up now? Thank you for saying we have a great show. Hope you mean that and it's not just saying it because it's us. Nolia, what's up, Noli? Love you, my sister Nolia. Always great. Garnett said, I was late, but I'm here. We glad you did, Garnett. So thank you for being on. And we look forward to what? Didn't say South Carolina, Modestine? Is that why you put SC in there? What did I say? North Carolina? You know me, I get to move. I might have said North Carolina, but I see you put in there SC. I must didn't say South Carolina. Lexington, South Carolina. Dope. My quote of the day goes like this. The truth is, peace doesn't come from Peace doesn't come from solving every question. It comes from trusting yourself to handle whatever answers life gives you.
That one I like.
1 out of 100 is not bad. Thank you, my good friend. Look, y'all, we're here next week. The 30th of January is getting ready to check out of here. Thank everybody for being on. And remember, y'all, please share this information with other people. You can share it on Facebook, and you can also subscribe and share it on YouTube. So thank you all, and we look forward. And one last thing I want to make. Come on, put in the comments some topics that y'all want to hear from us. Please put them in there. We still got more, but we want to make sure we address concerns that you have. But thank you all. We hope this was a great show for you today. And Modestine, now why you put Kentucky in there, Modestine? Where are you? I don't even know where you are now. You messing with me, Modestine. Look, y'all have a good day, and we see you next week.